In 1985, the global currency markets were reset through a historic agreement called the Plaza Accord. Now today, Trump has a plan to do it again, only this time, it won't be a coordinated effort. It'll be economic warfare. And the consequences? Well, they could trigger a global currency reset that changes everything. Now, is this good or bad? Well, both. So, in this video, we're going to break down what the original Plaza Accord was, why it's critical to understanding today's economy, how Trump's tariffs are forcing the world toward a Plaza Accord 2.0, and most importantly, how you can position yourself to not just survive this shift, but profit from it. Real quick, my name is Mark Moss. I make these videos to help you navigate the world as we're going through right now. I'm a partner in a leading tech-focused VC fund. I've been writing a financial newsletter for now about 7 years called the Quantum Wave Investment Report. And these are the same things that we're looking at so we can guide our strategies, and hopefully it helps you as well. So let's go. All right, now the key to understanding what's going on is in the past. Now, I've always used a lot of history in my videos to help you understand this. That's why I use cycles and things like that. I often get asked all the time, like, what are the best investing books that I could read? And I'm like, well, there's not really good at any investing books. What you really want to read is history books, because the reason why is, if I touch a hot stove, I'll most likely get burned. Now, next time I might touch it with my arm or my leg, but I'm also going to get burned. So it doesn't repeat, but it rhymes. When you understand these lessons of history, you can see how they're starting to shape up again, and very similar things could happen again. So to understand Plaza Accord 2.0, let's go back just real quick and understand Plaza Accord 1.0. This happened back in 1985, as a matter of fact, September 22, 1985, and it happened at the Plaza Hotel in New York City. Now, basically what it was a group of the G5 nations, so the top 5 nations in the world. That was, of course, the United States, Japan, Germany, France, and the UK, all coming together in a meeting. Now, this was a coordinated meeting because there was a problem. The problem was that the US dollar was too strong when compared to other currencies, which we're sort of seeing a strong dollar right now. And that sort of creates what they call this US dollar wrecking ball. What it does is it starts to affect other economies. It changes the way that we can import and export goods. And at this point, the US dollar was way too strong. And because of this, it caused these large deficits in trade to be happening. And so things started to slow down. So what happens is when U.S. goods started to get too expensive, then the other nations couldn't afford them. It made it very hard for those other nations to ship goods back to the United States. So they all got together, the G5, and said, hey, we got to do something about this. So let's coordinate something. Let's all work together cooperatively, and let's all devalue our currencies, or really, it really is about devaluing the US dollar and letting the other currencies adjust so that they could fix this imbalance. And at that point, the US dollar dropped about 50%. You can see this in this chart of what's called the Dixie, the dollar index. Now, this is the dollar compared to a basket of other currencies. And you can see this is the point right here in 1985 when this happened, this coordinated devaluation. And you can see that it's never recovered. Here we are today, sitting right around here. And so this is what happened in Plaza Accord 1.0. Now, a couple things to take note of. Number one, this was coordinated. So it was done in an orderly fashion. But even though it was done in an orderly fashion, in agreement, it led to, of course, the law of unintended consequences. So whenever you work with mess with a complex system, like the body, like the market, or like the economy, you can't just tweak or turn or twist or manipulate one part of it without having unintended consequences. And so some of the things that happened were, for example, a massive bubble happening in Japan, more trade imbalances happening around the world, and of course, it got even worse. Now, over the next couple videos that I'm going to be doing, I'm going to be diving deep into history because we're at a very historical, pivotal moment right now. And to really understand what exactly is going to be happening here over the next couple of years or this year, you have to understand history. So we'll be going more into that. But in this video right here, we're also continuing to talk about the tariff. So we talk about what the Trump administration is doing, and one of the things he's really using is tariffs. And really, the way that he's using tariffs is sort of like to maybe force a Plaza Accord, but this time a 2.0. So what are we talking about here? So Trump announced tariffs. So he basically said, hey, again, deficits trade deficits are out of whack, so we want to do something about it. What I want to do, because I want to make America great again, is I want to impose tariffs on any of the goods coming in the United States, making them more expensive, right? That way, U.S. can compete with that. Now, we see this. It's all over the headlines, of course. This is all over the news. I don't want to give you the news. You can get that on your own. But you can see markets are in turmoil, right? So the markets are all upside down, manufacturing, the economy, even the investment markets, because Trump kicks off this trade war. And the trade war, of course, is these tariffs. Now, so far, at the time of this recording, he's threatened a lot of big tariffs and then sort of walking them back. So it's like he's thrown that out there. He's gotten what he wanted. So, for example, he threw out massive tariffs against Canada and Mexico. Well, now they both announced that they're going to send troops to the border. They're going to lock the border down. They're going to personally, Justin Trudeau from Canada said he's going to be the new fentanyl czar. They're going to stop the flow of drugs. And so now Trump said, okay, well, we'll hold on the tariffs for now. So a lot of this is bargaining, but a lot of it is to get this to work. But we can see that right now the markets are in turmoil. We don't know what's going to happen next. But some of the world doesn't seem to like this. Now, this is an important piece to understand because we can see here the ECB, the European Central Bank, would surely balk at the Plaza Accord idea. They'd balk at that. No way we do that. But the funny, maybe interesting, ironic thing is that the ECB is already in a devaluation phase. They're already easing their currency. They're already manipulating their currency. So it's like, no, we would never do that. We already are. So we can already see that happening. We can see here China, kind of the same thing. China is in a different boat. China really, really needs to ease. They really need to start printing money. And their woes, this is the economic problems that they're having, make Plaza Accord less outlandish. I mean, they'll probably go along with it because they need a massive devaluation on their own. So you can start to see where some of these countries are. Now, we can see, again, when Trump announced these big tariffs on Canada and Mexico, exactly what happened. So this is the Canadian dollar against the U.S. dollar. And look at this massive spike that happened right here when that was announced. So you can see what that could potentially do to the trade wars with these currencies being manipulated back and forth. Here's the Mexican peso to the US dollar. Same thing. Look at that giant candle, that giant wick there. And so as soon as it was announced, you could already see the market started to react, which of course it caused not just currency volatility, but then that caused market volatility, especially assets that you buy that are denominated in fiat currencies that are being devaluated. Now, the thing is about this is, as I said, I showed you the ECB says, well, we're not going to do that. China says, maybe we will. But what this is and how this is different is the Plaza Accord was coordinated. They all came together and agreed they would do this in an orderly fashion. And even still, it had unintended consequences. What's going on here, though, is more like a strong arm. What's going on here is like bullying. Hey, you either do what we want or we're going to just force you to do it anyway. So you either come together and we'll do this coordinated or we'll just force you to do it. Now, the reason why that's important to understand is in a coordinated fashion, it led to unintended consequences. What do you think happens when it's done in an uncoordinated fashion? Well, probably way more unintended consequences. Now, one of the things we could be seeing is a complete GCR or a global currency reset. Now, this is what has to happen. Now, China wants it. ECB says maybe they don't. And the reason why is because each nation is trying to jockey and compete with their own currencies. Now, what the world needs is a major currency realignment, or what we really need is to get rid of fiat currency altogether, but that's a whole other story. But what we need is, historically, we've seen them realign the currencies in order to stabilize trade, in order to rebalance or correct trade imbalances and things like that. And so we can sort of all move together. But when it doesn't happen peacefully, we end up with trade wars and tariffs. So then each country is trying to retaliate. You hear that right now. Some of the nations, Mexico, well, I guess all of them, Mexico, Canada, China, they're all saying, we'll retaliate against the United States. Now, so that basically means when it's done unilaterally. So instead of together, coordinated, unilateral. Now, what that leads to is competitiveness, because it's like, well, you made our goods more expensive. We can't sell as many goods, so then we're going to devalue our goods and we'll make our goods cheaper. But then if you devalue your currency to make your goods cheaper, then we'll just increase the tariffs to offset that, and then we start competing and we start having a trade war, and that causes all these unintended consequences to happen. Okay, so what does that mean for us? That's kind of the news. But what does that mean for us? How do we navigate a global currency reset? Well, there's a couple things that we need to be paying attention to. Now, I like to break this down into the economy and the markets, because these are two separate things. They used to be the same. Now they're the same. COVID told us that, right? The whole economy was shut down. Markets went to new all-time highs. So from an economy perspective, we have to understand there's going to be a lot of market volatility. So for example, tariffs on incoming goods, commodities, steel, copper, things like that. So then maybe auto parts are more expensive. So then maybe the cost of new cars goes up. Right? So in the market, there's volatility. We don't know what the price of avocados from Mexico is going to be. So maybe the price of avocados is going up. And so there's going to be a lot of volatility in the market around prices as this all sort of starts to sort itself out. On top of that, this could create what we call inflationary pressures. Now, specifically price inflation, but inflationary pressures, again, avocados goes up, cars go up, things like that. Now that means for you and I, that means our cost of goods, our cost of living goes up. Our standard of living goes down, all right? As I said, like we can see the cost of imports rise. Now that's on the economy side. This is the good and the bad of this. So when the cost of my life, living my life goes up, that's typically bad. I have to work more to have the same standard of living. On the good side though, as investors, we want to be very careful of what we're investing into. There's massive opportunities here, but there's also a lot of pitfalls. So for example, we want to be careful investing into assets that are denominated in devalued currencies. So for example, I could be owning an asset like, let's say, the stock market in Turkish lira, for example, and it could be showing that it's going up, but it could be going down in purchasing power. So how do we protect ourselves from that? Well, one, you would own assets denominated in stronger currencies like the dollar. But number two, we'd want to own assets in appreciating currencies like the dollar or ones that are free floating around the world. This would be commodities, okay? So we can have assets like U.S. listed stocks in U.S. dollars, or we could have commodities that could freely trade around the world. Now, this is exactly what this chart has been telling us. It used to be copper was called Dr. Copper. Copper would sort of be the canary in the coal mine. It would tell us what was going on in the global economy, the health of the global economy. And today we have gold. And what this chart is showing us right here with this price literally breaking out, making new all-time highs right now, is showing us exactly what's happening. We are going into a new financial system. We are going into currency wars and trade wars and all of those things. And instead of owning assets and in different currencies and not knowing which ones are going to be suffering the fate through the law of unintended consequences, we might want to own gold instead. Now, there's a lot more going on with gold than just this, but this is one of the things. You can see that breaking out to new all-time highs. Now, remember, I said commodities like gold, but we can see this. Here's a USCI. This is a ETF. This is a basket of commodities. And you can see the same thing. Higher, 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 breaking out to new all-time highs right now. So get out of assets that are denominated in currencies and think about global stores of value like commodities. Of course, here's a chart of my favorite commodity in the world, which is Bitcoin. And you can see the exact same thing sitting here at all-time highs. Now, this is telling us that this shift is underway. The smart money is already moving to that. Now, the good is that this is an opportunity to make a lot of money. The bad is that my cost of living goes up. Now, as long as I take advantage of this, I can offset the damage of this. But if you're worried about this and not doing anything here, I got bad news for you. It's going to get worse. Okay, now, what does all this mean? Well, it means that instead of most people thinking the world is linear, really, the world is all about trade-offs. And as a matter of fact, things can be good and bad at the same time. What we can expect is to have a lot more currency volatility. So for example, I built a house down in Mexico. So when I go down there and I have to pay people in pesos, the cost of me paying people goes up and down wildly because of the currency volatility. Again, I showed you the Mexican peso is spiking right now. So if you need to deal with that, you need to think a little bit longer term. You need to be able to plan that out a little bit better. Also, we need to think about, remember, assets. Don't buy assets that are subject to a lot of volatility in the currency, specifically depreciating currencies. Think about at least appreciating currencies, stronger currencies like the dollar, or even better, hard assets like gold and Bitcoin, commodities, things like that. The other thing is that we need to think about the allocations that we have. Now, over the weekend, we saw the markets crash. The cryptocurrency markets just absolutely plunged 30, 40%. I got a text message from a buddy. I was out on a Sunday night, and he sent me a screenshot of his account, and everything was like major red. And he said, "I'm stressing out." And I said, "Why? Why are you stressing out?" I knew why, because everything was plunged. But why did that matter to him? You see, we want to think about adjusting our allocations so we don't. If you are anxious about what's going to happen or stressed out, that means you have the wrong allocation. So I told him, I said, look, think long term, think a year or more, right? And then think about your asset allocations. Now, for me, I have most of my allocation there in Bitcoin. He had allocated to a bunch of smaller altcoins. I don't recommend that. And so he's seen massive volatility. So think about putting your money where the assets are stronger and less money in more risky assets that have more volatility. And then think about your allocations overall. Do you have too much invested? So in his case, he had too much of his money that he needed short-term invested. So put some in that you can leave there for a year or more. Get on the other side of this. And think about those allocations and then adjust your timeframes, like I said. Really, you should be thinking about long-term in this market. This market is going to be extremely volatile, especially through the first quarter of this year, potentially even through the second quarter of this year. I think once we get on the other side of this, we're going to talk about in some other videos about how really the hand is already played. Like the hand will be forced, but we need to get on the other side of this, maybe a first quarter or two. It's going to be volatile. So think longer term, at least a year out. All right, that's what's going on. I'm going to keep you up to date on the play-by-plays and not giving you the news. You can go read that on your own. But what it means to you and what we could be doing about it, let me know what you think about this down in the comments down below. Of course, give me a thumbs up if you like this video. And if you don't, you can give me a thumbs down. That's okay. But at least tell me why either way. All right, that's what I got. To your success. I'm out.